Ladies and gentlemen, welcome back to another video. I'm your host, TheDividendAristocrat, and in today's video, we're going to talk about a company I just sold out of entirely. Now, if you guys do appreciate the transparency and enjoy these types of videos, consider subscribing to the channel. I would really appreciate it.
As a reminder, this is not financial advice, and I'm just merely sharing my opinions on this channel.
Now, for those of you that are familiar with my portfolio and are keeping up with the channel, you definitely already know which stock I sold out of. But before we get into that, let's take a quick look at my portfolio dashboard. So in total, I've invested $51,700 into the portfolio, and my current value is about the highest it's been on video, I believe, at $67,671. And earlier this past week, I did break the $68,000 barrier for just a short amount of time. Now, in terms of unrealized gains, it's currently at $15,900, and my total return is at 30.73%. Now, I did get a comment recently recommending me to use a time-weighted return, and so I'll look into that and see if I can implement something of that nature in the future. It's a little bit more difficult than total return, but for now, we'll keep total return, and if I can find another solution to the time-weighted return, I'll add that in as well. Now, in terms of dividend income, I've earned $1,926, and my yearly projected income going forward is $1,078. And I do basically make this caveat every single video that I record, but I did get a comment about this in my last video, so I just want to explain it one more time. My main focus in investing is total return, so I'm more focused on growth rather than dividends, but I do prefer stocks that do pay a dividend even if the amount is small. Now, whether that makes me a dividend investor in your eyes would be subjective, but in my opinion, I'm still a dividend-focused investor who tries to invest in high-quality companies that have a potential for high total return. My current portfolio yield is at 1.59%, and my yield on cost is at 2.08%. Now, my total holdings are 21. It was 22 just about a month ago, but right now it's 21 because I did sell out of a company entirely, and I have a cash position of $6,000, which I am looking to invest over the next couple months. Now, before we get into the company that I sold, let's just take a look down here. My amount invested so far is almost $17,000 this year, and my dividends received are about $507. We got some big dividends in the beginning of July. So now the company that I did sell out of is Tesla, and let me know down in the comments below if you already knew this or if this is a bit of a surprise to you. Now, I have a bit of a weird history with Tesla. I've never owned a lot of shares in the company. It's always been a very small position, and as we'll look at later, my personal position and what I bought over time, you'll see it's very, very small. Now, I've always bought it as more of a speculative / turnaround play. The stock does tend to have some pretty big decreases right here in stock price. As you can see, it bottoms pretty aggressively, and then it tends to spike up aggressively as well, which gives a good opportunity to make a quick swing trade. Now, this will be a fairly brief video, but throughout the video, I will explain some of the reasons which I sold the company and why I initially bought into it, and also talk about whether I'll be buying into the company again in the future. But in the meantime, let's take a quick look at some of the financial metrics because there's a lot here that I like, but there's even more that I don't like. So starting with the revenue per share, we can see how aggressively it grew from 2013 all the way until 2023 really, but especially 2022, at which point it started to slow down and then flatten from 2023 all the way to 2024. Now, because of this quick growth in revenue, basically their sales increased exponentially. You can also see how quickly their stock price grew. And this is where a lot of that return, where a lot of Tesla investors will say they made a lot of money, was during this time period. Early investors in the company, especially those that invested 2019 and before, got rewarded very generously for their investments. Taking a look at Tesla's performance over time since 2010, the company is up over 24,000%, which is amazing. But what I really want to focus on here first is that you can see what I was talking about. If you bought the company in late 2019 or even early 2020, you'd be up a tremendous amount. From then until now, you're up 2,038%. But even after about a year in the company, some people were up over 1,700%. And at the peak, they were up almost 2,300%. Now, for a long time, this company was not profitable and the stock price was extremely cyclical. It increased pretty well up to 2015, but then from 2015 to 2019, it's been all over the place, with the bottom in 2019 actually being lower than some prices people were buying it for back in 2015. Now, since then, they've had this big uptick in growth, and you can see the stock price is now sitting much higher than it did before, but similar to what we had in the past, the stock price has now been pretty flat for a couple of years. Taking a look at the past 5 years, it is up over 200%, but that really depends on when you purchased the company. So if you bought it here at the peak in 2021 and held it, then a lot of the time you'd actually be in the negatives, down 58% in December 30th of 2022. Now, this whole period right here as well, the prices were elevated, and if you bought it anytime during that period, you'd be low for a lot of this time frame. So I think that's where a lot of people's success depends on. If you weren't an early investor in Tesla where you really took advantage of this big price jump up, then a lot of people have not made money on the company in the past 5 years. Now, me personally, I waited for good buying opportunities and I bought it pretty low. I believe around the $150 per share mark each time I purchased. I think one time it was $150 per share and the next time was $140 per share. And I think those are some good buying opportunities. Now, there are several reasons as to why I sold, but I always bought it as more of a speculative play. And so when the price had increased so significantly and the company's fundamentals were not improving as quickly as I wanted to, I decided to sell the stock. We'll take a look at my individual buys later so you can see where I purchased the company at and how my return has been. So going back to the financial metrics, like I was saying, the revenue per share increased pretty well over time, but now it's slowing down, which is part of the reason that the performance has not been as good in the past couple years. Now, a similar picture can be painted with the earnings per share and the free cash flow per share. So both were negative for a very long time. And then 2019 is when it changed to positive and stayed positive, which is why there was so much growth. As you can see right here, 2019 is the first free cash flow positive year. And then there's explosive growth all the way up until 2022, but it has since declined pretty significantly. Now, the company still sits on a fairly substantial cash pile. You can see right here, their free cash flow is about $4 billion, or at least very close to it. But they also have relatively high levels of stock-based compensation shown here in red. Now, the reason this chart is not showing is because Tesla does not pay a dividend. If they do in the future, then it will begin populating in this chart right here. Now, in terms of shares outstanding, assuming this graph is accurate, the company has continued to dilute shareholders over the past couple years, which is expected when a company is in its growth phase. But as this company matures and is part of the Magnificent Seven group of investments, I'd expect the shares outstanding start going down, or at least there being some share buybacks to counter this. Now, the net income margin has been all over the place. You can see it was negative for a long time, which makes sense because the earnings per share and free cash flow per share were negative. But in 2022 and 2023, it did peak and has since come down. Now, a big reason for that is that Tesla has lost a lot of sales leverage in the past couple years, especially more recently as they've had to reduce prices in order to continue hitting their sales targets. Now, to me, this is not the sign of a healthy business, and it's rather a business in decline, especially for their core car business. But of course, it depends on the investor what the main business segment for Tesla is. If you ask a lot of Tesla investors, the reason the company is pricing in so much growth is because of the future capabilities of robotaxi and humanoid robots, but that to me is not the most important metric currently. A big argument that many investors make for the company is that the core car business is just meant to generate free cash flow that can be reinvested back into the company into higher tech, higher margin businesses. Now, I definitely don't think that this is a bad idea. A lot of companies have worked pretty similarly, just like with Amazon investing a lot into their AWS business and eventually becoming free cash flow positive with high margins, but we'll have to see how this plays out for Tesla in the long term. Now, in terms of CapEx, it has exploded over the last couple of years, which is not the worst sign for the company. They are investing a lot back into R&D, but as the return on invested capital continues to go down, this is less and less ideal. When they had this high ROIC at over 20%, it made a lot more sense to invest as heavily as possible back into the company, but at some point, the declining margins and declining return on invested capital might make it so that the CapEx investments don't pan out as useful for investors as they could have been. Now, another thing I want to touch up on here is their price to earnings ratio. I know it's not the most important metric, it's not the perfect valuation metric, but right now it is trading at extreme levels of valuation. Now, a big reason for that could be the decrease in earnings. If we were to see earnings per share go back to the previous levels where they doubled, then the price to earnings ratio could potentially be cut in half. However, even with the price to earnings ratio being cut in half, this would still be over an 85 price to earnings ratio, which to me is just too lofty a valuation for right now a company that's not performing. Now, everybody always says don't bet on Tesla, and so I will have to give them the benefit of the doubt. There's a good chance that a lot of their investments do pan out and end up being very profitable, and I am still rooting for the company. We'll take a look later at my purchases, but if there is a big enough swing down in stock price, there's a good chance I would jump back into a position. However, at these current levels and with the company's performance, I just figured I'd take some gains off the table in the meantime, and we'll see where I go from there. So right here on December 15, 2022, I bought my first 2 shares of Tesla at $156.61. That gave me a total order of $313.22. Now, like I said before, I had a very small position in the company, and that's because my speculative section is fairly small on purpose. Now, scrolling down, we can see that I bought one more share on the 22nd of April 2024, and that's because I had a very steep drop in price to $140 per share, and I accidentally timed the bottom and actually had some more limit orders set for the company. I wanted to pick up more shares at these prices if it continued to drop, but unfortunately it hit 140 and basically did a V-shaped recovery straight up. Hopping back into Google Finance real quick, let's take a look at where I was buying these shares. So the first one is in December of 2022. So I bought it a little bit lower than that at almost $150 per share, which is right around here. And you can see that the stock price since then has actually increased pretty substantially, which was nice. And the second purchase that I made was in April of 2024, which is down here. I basically timed the bottom. We can't even get a $140 price here on this graph, but it did hit $140, and that's where I purchased my shares. And since then, that also increased substantially, especially with the Trump election. So looking at my sell history section, this one's a little bit more rough because I'm still figuring out how I want to keep track of my sell history. But you can see I sold my first 2 shares of Tesla. Those were the ones I bought at $156. I sold them at $371 per share, or a total order of $742, which gave me a total return of 134%. Now at the time, this was my best performing stock in my portfolio, so it was pretty nice selling it at pretty close to its 52-week high at the time. After that, the stock price did continue to climb a little bit more, so if I would have held out, I would have been able to sell for an even better total return, but it's still alright. Then a little bit over a month ago, I decided to sell my last share of Tesla, and that's when the whole feud between Elon Musk and Donald Trump went on over Twitter, and to me it was just too petty of a feud for a CEO of a publicly traded company to be participating in. As an investor, I have a lot of faith in the company, but I did not have a lot of faith in Elon Musk. This was basically the last straw for me, and so I decided to sell out of my position entirely for the time being. I paid $140 per share for my original position, and I sold it for $285, which is just a little bit over a double. Now, for those of you that are still holding a Tesla position and are considering selling, the stock price has recovered since then to $313 per share, so you definitely have a bit of a better sell opportunity than I did at the time. Now, for me personally, I already had a pretty good gain on the position, and I just wanted to get out of the company before more damage was done to the brand or the reputation, and so I sold out at $285. Now, just to be completely transparent with you guys, I do think that Tesla has a pretty good chance of performing well in the future, but at these current valuations and the risk of the company's brand and reputation, I did not want to continue holding my current shares. Now, if the stock price and valuation came down considerably in the future, kind of like I was buying here at 140 and 156, I would certainly consider adding into a position of Tesla once again. I'm not sure yet what my price target will be. I would have to do a little bit more research and see what their future expected earnings are going to be, but I would say it will be somewhere around the $170 to $200 range. Now, the prices may not come down that significantly, and that's totally okay with me. If the price never touches my price target, I'm okay never holding this company again because I think the reward has to be relevant to the risk. At these levels, it's not that Tesla cannot outperform going forward, but it just has a much harder time outperforming. So real quick, before we end the video, let's take a look at my MyPie section of my spreadsheet. And if you guys are enjoying the video so far and have made it this far, leave a like. It really helps out with the YouTube algorithm. So I divide my portfolio into 3 separate bins just for organization's sake. So I have Key to Success, which is my ETFs. I have my Divine Dividend, which are my blue chip dividend paying companies. And then I have Miscellaneous, which includes any companies that don't fit into any of the other 2 categories. In this case, we have companies that either don't pay a dividend, don't have a consistent dividend, or have gone through dividend cuts. We also have speculative companies like Intel Corporation, which I'm betting on the turnaround. So before cutting Tesla from my portfolio, you guys might remember from previous videos, it was in my miscellaneous section, which I used to call my speculative section, but renamed it because I believe miscellaneous is a little bit more accurate for what's in here. At the peak, it made a fairly sizable position of my miscellaneous section, but since selling it, of course, it has come down a decent amount. Now right now I have my target and actual allocations here, so I'm not really focused on getting more speculative companies or miscellaneous companies. It's already sitting a little bit too high, and my Divine Dividends is also a little bit too high as well. My main focus right now is to continue adding to my ETFs consistently. I've been adding to both VOO and SCHD on a weekly basis, and if you guys want to see my investing plan for 2025 where I talk about that, I'll pin a video right up here for you to check out. Now, with all that being said, what I want to point out before we end the video is that these companies in red are ones that are on the chopping block. They might not get sold right now, but they will be sold likely in the future. I say this just to give you a heads up so you don't find it surprising when I do decide to sell out of a company suddenly. Now, the companies in yellow are just ones that I'm considering whether or not I want to continue keeping them. So Home Depot is yellow because I'm considering whether I keep both Lowe's and Home Depot, or if I just get rid of Lowe's, or if I get rid of both. Now, the reason Target is in yellow is because I did buy it as a turnaround play that I am considering keeping long term, assuming the company's fundamentals begin to improve. What I'm going to be doing is over the next couple of earnings calls, I'm going to keep track of how they're doing, and if the trajectory of the company does not begin to right itself again, I might have to sell out of the holding. As always, that does bring us to the end of today's video. I really hope you guys enjoyed taking a look at my portfolio and seeing why I sold Tesla. Now I do know that this video is pretty brief, so if you guys have any questions about why I sold Tesla, anything I didn't touch up on the video, definitely leave them down in the comments below and I'll get to them as soon as possible. Now if you guys did enjoy the video and want to help the channel, consider leaving a like. There's definitely going to be a lot of hate coming down in the comments from the Tesla bulls, so I would really appreciate it. If you want to check out last week's video where I talked about how much dividend income I received in the month of June, check out this video right here. And if you want to see the video before that where I talked about 3 best stocks to buy in the market right now, check out this video right here. Remember, the best time to invest was 10 years ago. The second best time is today. I want to thank every single one of you guys for watching, and I will see you in the next one.